Good afternoon, this is Tom Asper with the Viper Report. It's Wednesday, March 11th. As you can see from this NBC headline, the Dow entered bear market territory today as it dropped another 1,400 points as the investors have gotten little word from the administration on what they're going to do to curtail the coronavirus impact. A few weeks ago, I sent you a link to my February 23rd Market Risk Hits Home post on Forbes.com. That was just over 2.5 weeks ago, where I concluded that my warnings of the market risk were taking hold as the market had turned lower that week. As I pointed out then, I have also been concerned that investors seem to be buying on the assumption that the new Wuhan coronavirus not big deal or a concern for investors. We all know that that is not the case. In tonight's email, I have a list of several of the articles I wrote in January warning of the market risk. And if you're interested, you can read what I was saying on January 12th, January 19th, and January 26th. In the January 19th post, I was joking that investors got more bullish, isn't investing easy, which obviously was a tongue-in-cheek comment. In last weekend's article, Uncertainty Breeds Opportunity, I discussed that using technical analysis, you can highlight key support levels and use those as an opportunity for new positions. If you're not in the market or you're looking to get involved, there are some stocks that I'm liking at current levels, but one needs to understand with the high volatility and sharp decline, it may take more than one attempt to get long. One of the stocks I recommended on Monday morning's opening was Visa, as I was willing to risk a little over 3% to buy this stock as it had great long-term support in the 166 area. It hit a low of just above 168 early Monday, but is currently above that level even though the major averages made new lows today. Stocks like Visa, no matter unfortunately how bad the virus gets, people will still be buying things, and a lot of them will be using Visa to pay for those. That's why it's a stock I like. I also like utilities, the XLU, which is the Utility Sector Select. We have made some good money on this all year. We're stopped out of the sharp reversal, but now it's getting back to important support in the 60 area. It currently has a yield of over 3%, which is very attractive when the Treasury notes are yielding 0.7%. No matter what the condition of the economy is or of the world environment, people will still need to heat their homes or cool them, and electricity will be essential. I don't think they're going out of business, and I find that yield very attractive. So that's another ETF I've been recommending. In fact, there have been two other well-known names that I recommended to investors this week. So far, we've stayed in all of them, but tomorrow's another day. I do think there's lots of evidence to suggest that we are close to a market bottom. Now, I'm not saying that's a major bottom, but it should lead to a 5 to 10% rally. This chart here shows the put-call ratio was above 2 on Monday. That's the highest level it's been in over 4 years. That means too many people were buying puts. That's a sign of how high the bearish sentiment has been. Another reason I think the market has gained sold out is this plot of the advanced decline line differential that goes back to the start of the bear market. It hit a low of over minus 700 in this last week. You can see these circles represent the prior low levels, the correction in 2010, 2011, 2016, and in late 2018. Most of you remember how weak the market was then, and the AD line differential is now weaker than it's been in any time going back to 2006. If you're still in the market and have ridden out this decline, I think now is too late to sell. That's why I always recommend stops on long positions, and when the risk gets high, I tighten those stops up. I do think that the market is likely to be up to 10% higher in the next several months, and there's no clear sign yet from the fundamental analysis of the economy that we've entered a recession, though the recent shock makes that certainly a possibility. Before that happens, I think we'll see a very sharp rally in the overall market, and we'll be evaluating it at that point. But for now, this is as low risk an entry point as many of you will get. Be sure to manage the risk of those positions, stick to your plan, and if you're interested in specific advice, hope you'll consider either the Viper ETF or the Hot Stocks report. Many of my students who have taken my ED class had a great time in the past couple of weeks, making very significant profits in a short period of time. And if you're interested in more information on that, you can check on our website at Tom's Intensive Advanced Decline Line course. It'll help you understand the stock market better and become a good investor. I will get back to you on the weekend. Thank you very much.